Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Alright, how's it going? And welcome back to mentfx. A few things on the agenda today. Let's get right into it. So I'm going to try and keep my videos a little bit simpler on the public and free space. But today what I want to discuss is a problem that a lot of people see, and I want to just tackle with that problem and deal with elements of that issue. So a lot of you may know this from your own experience, and you probably experienced it before. And right now we're going to talk about it a little bit and then where it can stem from. So one issue that many of you have very likely experienced is that I get involved, or I'm looking to get involved. I'm always correct about my direction, but I'm never able to capitalize on the trade or make money. Now, there are a number of features as to why that may be happening. One reason, okay, so number one reason that that could be occurring is that even though you're correct about direction, you're already anticipating the movement against price prior to following your direction. I'm going to go in depth on all of these in a second. So one of the reasons this might be happening is that you expect price to go in a direction, but you anticipate and trade the counter / pullback before the follow through of your direction. And as a result, you end up in this weird dichotomy where you're actually technically always correct, but never in the move. And I'm going to talk about that in a second. So that is one way that this issue can come to prominence, is that you expect price to go in a direction, right? But then you anticipate pullback or certain enemy side trades, and now you basically have assumptions of two sides of the direction. So either way, you're correct, but you're also going to be wrong, and we're going to get into that in a little bit. So that's one way that you can have the correct assumption but actually be wrong. Another way is that you might understand the underlying direction. You're correct about the direction of a trade or where the market may be heading, but you are trading the stage one portion of that market. This is a problem that is to do with what I call context, okay? So we have two things now. Now the second one, as I just said, is that you're actually fully correct about the direction. A lot of you might have actually been bullish on UJ, and that's phenomenal. Now, within the time that you were bullish, you might have switched, and that would have been already an issue. But what could have also happened is that you're fully correct about the direction, but because price was going sideways for so long, and you were taking trades or multiple trades within that area, you continuously took more and more losses. And as a result, once you finally given up taking trades, so for instance, if you were taking longs inside of this area here the whole time, you might have been wrong a number of times. You can see I was right, then I was wrong, two break evens, and then I sat out of the market until it showed me that bullish is coming in, and then I began following it again. Some of you may continue to, because you're not aware of how to walk away from a market or how to be patient. Some of you may continue to, on this time frame, on a higher time frame or a lower time frame, continue to trade inside of every single one of these price actions here. Which means if you're getting involved in longs inside of all this, what happens is tunnel vision begins to take effect, and because you get so tunneled in on it, you take multiple trades after trades after trades, losses after losses after break evens after break evens, wicked out, back and forth, that you begin to doubt the direction of the market, and as a result you sit out, and all of a sudden the market does make its beautiful move and you've missed out on that move. And then at that point, what may happen, this happens to a lot of weak-minded traders, is because they've now seen a big move come into the market, they are now going to force and look to get involved on new longs. And again, through a tunnel visioning, where they're focused on doing something, they're getting long here, over and over and over again. And as they keep getting long and long and long inside of all of these areas here, the same thing occurs. They continuously take wick out, stop losses or break evens or very minor partials, don't see much consistency, and finally believe that, okay, I cannot take more trades, I'm clearly wrong, I'm going to walk away. At which point, the trend re-picks back up. And again, the same thing is going to repeat inside of these areas, and then the trend picks back up, and now, once again, many traders are going to try and start getting involved for longs right now, and prices are likely to undergo some form of reaccumulation. And again, at this point, when most traders give up, the move begins to be made, and once again, you've missed out on the actual trend. So these are two examples of how you are wrong, how you're correct about the direction, but you're wrong about the actual trade. This is two ways from which it stems from. So let's go over those two very quickly. One is now that you're actually expecting price to be bullish, and this is very important. So let's talk about this from a standpoint of what other places teach. Even if you're bullish on this, so let's say a lot of you may have shown up to this UJ market and have established that you're going to be bullish on this no matter what. You're done, you've decided it, the market's bullish, I'm going to follow bullish. What's going to happen, and this happens in signal groups, mentorships, and all that fun stuff, especially if you haven't taken the time to learn this and you're learning from someone that's just kind of randomly doing things, what's going to happen is you're going to be taught to, despite the fact that you know, hey, the market's in a bullish market condition, right? It's super bullish. We can expect bullishness. A lot of you are going to be taught to predict this next high in anticipation for a move back down to create a higher low to then make a new move. So this is where number one stems from. And what happens is instead of now focusing on how can I continue to get long on a bullish market right now inside of this area to keep going long, how do I get involved in this? Instead of asking yourself that, you're looking left on every time frame to get short, right? So that's the number one issue where you're basically going, here's a resistance area. I need to look to get short here because the market has to make a higher high and then a higher low. Here's a little up candle before the down candle, right? Here's a little supply zone. So prices are very likely to mitigate here, go short, make a higher low, and then make a higher high, right? Prices are going to go to this supply zone, go short, then go long. So that's one of the biggest issues, is that you understand the underlying money in the market, which is a phenomenal thing to do, but you start to force the opposite side, and as a result, you become that cloud of liquidity. So now you have this example of a time where you're like, I'm always wrong, or like, sorry, I'm always right about direction, but I never make money. Well, that's because you're picking two directions at once and now hoping to make money. So when you're short here, if it goes down, you're like, I knew I could have done it, but I didn't make it, because again, the price is going to chop around and then fall off and then go long. Or prices are just going to keep going long and you're going to be like, I knew it was long, but I couldn't get involved. Bullshit, right? So you're being taught to think the wrong way already. So you need to get rid of that. And the second one, as I just spoke about, is that you're correct about the direction of a trade or where the market may be heading, but you're trading the stage one portion of the market, which is context, where basically, because a market begins to kind of break back and forth and you're not aware of that, and now you're taking trades, you're likely to take more losses and wins back to back to back and start giving up. You start getting scared of trading taking another trade, right? The example of this, right? The best example of this is like if you imagine you're in a shower, okay, and you turn the little knob, right? And because you're trying to get the correct temperature because you want to take a nice shower, and it starts being blasting hot, right? And you touch it, you're like, fuck, it's hot. It's hot. Instead of continuing to touch it, it's hot. What you could do is you could wait for the water to get to a normal temperature, because that could be one thing that you need to do, because sometimes it takes some time. Or you could begin to slowly turn the knob to allow the temperature to acclimate and become more cold before you get back into the shower, right? The person that is stuck in this number two issue where they're sticking their finger in nonstop, sticking their finger in, yeah, they're gonna get burned and then they're gonna be scared to get in the shower. But in reality, if they took a step back or slowly turned the thing, then the context has changed, and now you're going to have a beautiful shower. Similarly, in the markets, yes, within bullish markets, there are going to be times of reaccumulation, of new weak to strong hand transfer, and that's basically the example of what consolidation looks like. So in a bullish market, you can have prices that I've spoken about in my previous videos where the protected lows are continuously increasing, and all of a sudden price breaks down. Price breaking down here is not indicative of a shorting market. That's where a lot of people start going wrong. And all of a sudden, if you just understand that this high still is the high that wants to be taken, and you start to wait for and assess the conditions until bullishness has re-entered the market, then this is the easiest type of trade that is going to be available to you that's going to continue going. And this is the same trading style that I've taught and used on my channel, privately and publicly, and how I predicted for you guys publicly here the moves from initially here, through this high, through the continuation high, into the breakdown of the reaccumulation until I made a new video talking about the fact that it's going to take out this high and hopefully keep going higher to this high. Prices continued going. I made more videos here on my public channel. Prices started going. I said it would continue going higher because of the people that are looking left, and they're becoming the what I call clouds of liquidity. That's how liquidity forms. People that are endlessly looking to sell, right? Not equal highs and equal lows, but people that are looking left to sell at all the areas they can possibly find on the left. That's how liquidity is created, and that's why liquidity gets ran, right? So if you can understand that within uptrends, you undergo portions of reaccumulation and new contextual sideways movements, then you continue to take a step back when the shower is too hot and you wait for it to get to a perfect temperature, or you fine tune it to be at a perfect temperature, or you test it once, you get burnt, and you walk away again, right? That way, even if you enter one of these and you're taking a long and then it starts losing again, instead of continuing to stick your finger under to see if it's still hot, which it probably will be, you can either A, wait later and then start following a new market condition because now it's exited the area of orders or the weak to strong hand that it's been existing in, or you can simply fine tune, right? So you could fine tune to get a little colder. So what that means is you could step between timeframes to figure out where you are and then get involved potentially. So these are one of the two main issues for actually getting this misconstruing of I'm getting the direction right, but I'm constantly not in the trade. Well, these are just some of the examples as to why that happens. One, it's because you're actually trying to get involved in both sides of the market, both sides. And so no wonder you're going to be wrong 24/7 because, well, every time you get involved, one side's going to be wrong and you're always going to attach your feelings to being more wrong. And two, you're correct about the direction, but you allow what undergoes in normal markets, reaccumulations, breakups, breakdowns, to affect the underlying, right? And as a result, you start to focus on the wrong side of the market because it's very easy to do that, okay? So for instance, a good example of this is this break right here. When this break happened, the first thing I told everybody in my mentorship and here publicly is that this is acting like a reaccumulation model, and simply we are going to wait for money to come back in the form of footprints to prove to us that it wants to continue going long. And at that point, we are going to target this next high as the next structural high to be ran, because that's what true liquidity engineering looks like, and hopefully continue moving higher to clear the high above in a bigger show of fashion and a beautiful explosion, right? And as a result, when we saw money begin to come in, prices begin to hold the prior down moves before the up moves and begin to accumulate higher, those are those footprints being shown to us. That's big money stepping back in to hold up certain areas of demand and continuing to hold that move, thereby showing you that the likelihood of this being a reaccumulation is in the 80 to 90%. And as a result now, when you follow your system, you can now get involved with the prospect of knowing that the big money is on your side. And on top of that, as you all may know, the mentfx.com/sentiment indicator has been and has continued to stay extremely bullish on the daily and has not changed from an 80% plus ever since around May. That's correct. Since May, this right here has not shifted really from an 88% positive or 80% positive to the bullish side. So again, showcasing this extremely important element that there can be contextual parts of a market that are not tradable even if you're correct about trend. This is where those issues are prominent and coming from. Now let me think for a second. Is there another one that I can think of off the top of my head? So one is that you're just trying to get the pullback and you're trading anything to the left to get a pullback, so you're already getting it wrong even though, you know, you're technically correct. Or you're correct, but you're getting you're getting scared to enter because it's going back and forth. Oh, and the third one is that it's kind of in the same ball as two, but it's that a move has made its move and now you want to get involved, right? So this is kind of the same as number two, where basically, okay, so I'm going to show you some examples because these are all the trades that I personally traded. Let's look at these right here, okay? So personally, price goes sideways. This is a good trade, but I missed this one. Then goes, correct, and then starts making an ICI out of this low. So very simply, an ICI is my main entry criteria. This is an entry criteria that happens every single day. It's very simple. You look for an impulse, a correction, and then an impulse. And very simply, the way it works is you look to buy stop or sell stop if it's flipped, right, into the next impulse, protect a small portion of the consolidation or the prior impulse, and then look for the upside potential of the next ICI. And because money is supporting the move, is behind the move, and there's context that's telling you what the market wants to do in the sense of the institutional sentiment as well as the overall market, you can expect that prices, even if it makes us high, can start to do something along these lines, right? And then explode because money's now behind that move. And that's exactly what you see here. Now, I'm going to be honest with all of you because I hope you understand this. I'm a trader just like you. I improve and I get better and better every single week, every single month. And I share all these things with my team and I continuously improve myself. I journal my own trades. I've journaled every month. Let's go right here. So this is my personal journal for just August and the start of September, right? I had a phenomenal month. I mean, you guys can see this right here. About 33 trades, 55% win rate, 7 break-evens, 8 losses, 18 wins. Absolutely insane. Don't look at the account size here. That's just a simulated account size. Don't worry about that. But this has been my equity curve for August, okay? It's been an insane month. The reason it has been an insane month is because, as you all know, the thing that I've been teaching you over and over and over again has continued to deliver. So when I've taken trades and the money's there and it's moving there and the direction is already correct and I'm just taking the risk on every single time, well, it's opening myself up to the largest possible reward on that side. Now, again, for all of you that are watching this right now, this entire thing right here, the entire one is available completely free, as well as how to use it, how to record your data, how to think about the data, all this stuff, including this thing right here, is available in the private mentorship. It's all there. You get instant access to all of it and more, and amazing people. So just remember that. If you want access to this, that's where you can find it. Now, this is the ICI entry. And again, when I enter, the expectancy is that if price just starts going, then you can manage this accordingly. Now, the reason I'm talking about this is because, as you guys know, I do this myself. I personally need to focus on, work on, and improve my own management system. Right now, my management system is very simple. It's profitable for me. It makes me money. It makes me a good amount of money. As you see firsthand right here, I'm doing very well with my system, right? I can show you some of my trades like it's, sorry about that. I can show you some of my trades right here. We're looking at break even, 2.2, 2.28, 2.29, 0, 2.89, minus 1, 2, minus 1, minus. So you can see my highest gains, or my highest gain was a 6.65 gain. So that's gonna be the odd man out. But you can see that I have very low RR gains using the system, but still very profitable. Now I've noticed that I'm very good at pinpointing direction, as you all know, and I've taught you here on this channel. So if I just allowed myself to manage my trades better or created a management style that was a lot more in line with letting moves really run, then a lot of these trades can become absurd, right? The 30RR, 30RR. Now, again, I'm not going to be catching the whole thing, but there are things that I can do to start capitalizing on bigger moves like this. That's where my trading has evolved to. In the evolution of a trader's journey, you are going to go through parts in your journey where at first, you're not going to be even profitable, so you're just trying to find a profitable system. And at one point, you're going to be very profitable, but you're going to start seeing how much you're leaving on the table and how through continuous data collection, data review, you can actually become a much better trader, do a lot less work, and ride out the gains. That's what I'm working on now. I'm not perfect. I've never claimed to be. I teach everything I know. I show people what I do. I post things beforehand, all the time, afterhand. We talk about markets prior. A lot of you in the private webinars know we've discussed UJ longs forever and exactly how we approach them, understanding context, all this stuff, right? And there are always things that I can still improve. This is an example. The fact that I've only caught this much amount of this move when this is the move it made should show you that firsthand. But it should also show you that despite someone that hasn't had a system that is perfect, beyond repair, and super simple, and I'm running out these amazing trends, I'm still able to create a beautiful, beautiful result for myself. And that is because, well, one of the main reasons of it is because I'm actually journaling my trades. So one of those third issues is that you're actually getting involved too late. So for instance, this is what an ICI looks like, and you can see in the start of now a new bullish bias within UJ, well, the bullish bias is there for a long time. The bullish context is there, but this is the start of a new bullish leg. You can see there was no bullish trades here until it started to reclaim some of these 200 MAs. Now, this is something that I'll be teaching more in the private and maybe more in the public a little bit later. But the way you kind of want to think about it, just a very quick synopsis, is that in general, prices move like this. So if this is a 200 MA, right? Or maybe we'll do it like this. If there's a context that's overall bullish and there's a 200 MA like this, prices are going to move a little bit something like this, okay? And this is actually going to bring me to my next point, okay? And my next point is that most of the best entries, whether it be ICI, SSCs, so SSCs, which is basically simply this entry here where you look to take it long. ICIs where you're looking for impulse, correction, impulse, right? This is my favorite entry because you're basically waiting for all the money to come in and then you're just riding that money. That's why it's one of my favorite con firms, and that's why a lot of people are finding success with it here publicly and privately, okay? But what's going to happen is this is going to happen 1 to 3 times max in around this portion of price right here. After that point, you're on the ride. What happens in that number 3 example of you being correct about direction but wrong with your trade is that most people will not take on the risk here because they're afraid, because the market does not look like it's ready to make that run, right? Because if you look left, it looks like everything's going to stop it. There's places that are holding you back. Like if you look left here, it looks like this is going to stop it, 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 this is going to stop it. And people are scared to take these initial longs because it looks like, from a scary perspective, that's what's happening. But again, those people are thinking in those initial areas where they're like, oh my God, price is going to stop, price is going to stop, price is going to stop. And that's going to create, like we know, these clouds of liquidity. That's why this run happened. That's how these runs occur. That's what we look for. So you'll usually get 1 to 3 ICIs, and impulse, correction, impulse, that are good entries in the starting points of this kind of price and MA crossover. And then at the expellment of the move, this is where most retail or dumb money starts to enter longs, even though they're correct, right? And now, even though they're correct, they're getting chopped out back and forth, just like I spoke about earlier with the issues that people have. And by the time it's time to make the next move, and I'm getting involved here, here, and here, these people initially are now terrified until the move has proven that it's long again, at which point they want to get in. But now the move is back to actual reset. So this is what I call and teach in the private mentorship as a flush out, right? Very simple. We've spoken about it in the most recent webinars a few times. Those are what flush outs are. So if you notice these trades, right, you have price kind of start re-interacting with the upside portion of this moving average. And as it comes up, it sets up, it has a good trade here. That's one ICI. Very simply, it's looking at either this as an ICI to go long, and you can see that long is beautifully working out. And within it, you have ICIs too. You have an ICI. That's the same thing. That's that same concept. You need to see this fractally, and this is why you need to realize this happens everywhere, but you need to be very, very picky about when you take these setups, because again, context is a huge and very important part, because if you're taking these setups in a back and forth market, you are sadly taking a lot of losses, okay? And then again, you have a reset or a flush out, a breakdown. This is where people start to see, right? So again, people see that it's bullish, people start getting into longs, they get flushed out of those longs, and then all of a sudden, you again start interacting with the upside of the moving average. ICI, that's where you can see I took this next long through, took that long, now I got to manage it because of rollover, so I took a partial, and then on the next move higher, ICI, you can see where my next buy stop was through with the expectancy that this is going to continue going long, and that's exactly what happened. And then I simply had a trail going that stopped me out right here. Now, a lot of you should look at this and say, what the fuck? Why'd you get stopped out? Blah, 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 blah. Well, because at the moment, these are my rules. These are the rules that make me money. These are the rules that generate positive EV for me. And I'm not going to do something random until I've tested a new rule set. Now, part of my new rule set is allowing for moves like this to happen, and I have trailing rules in place that are going to allow for me to take and capitalize on larger moves like these down into the future. However, in the meantime, just like I spoke about in my last video, it doesn't matter what the move does after it meets my profit targets if that's the system that I've outlined. I do not need to get emotional over the fact that markets sometimes do this. That's going to happen. My money is going to be made in the fact that I'm following a profitable system on repeat. So that's what can happen, right? And now, again, this is an example of where the money has now come in, it's done its bullish thing, and now you're going to have a lot of retail or more dumb money starting to enter new longs here, like going, oh, maybe this is going to be an ICI now. Of course it can go long. The reality here is that even if this ICI occurs, the trade is terrible. The context is gone. The likelihood of this market is that it does something like this now, which means, again, a few multitude of losses for a lot of people that don't understand how markets move, probably will undercut, do this for a while, and then right here, it's going to start a new ICI move higher. That's going to hopefully make a continuous move up into the highs here, right? Because I've been bullish on this thing forever. That has not changed. I've been sharing that in my videos, and that's where I'm going to be looking to make my money. Okay. But again, at that point, many people would have given up on this market if they're not already just looking for shorts. Because remember, some people are right about the direction and they just need to make some of these smaller little adjustments to be right. But some people are so far gone that they're still, even in a market like this, forcing shorts. And they're part of what I like to call the clouds of liquidity that exist right here. Every single person that's looking left to get short at all these areas here, every person that's averaging down within all these shorts here, all the people that are already getting in the shorts, all the people that are watching the new shorts here, the imbalances here and all that stuff, the people that are looking at these equal lows and the trend lines to start clearing out, those are the people that are now that need to fix, first of all, their understanding of trends, and then can move to this issue and solving this issue of not actually being able to sustain on a move. Okay, so those are some of the main things. And then I would say the fourth one, okay, is that, and it kind of goes in context with number 3, is once the move is actually missed, right, and it's now delivered, and now you need to wait for a new reset or a flush out, the trader tries to get involved. So that goes really much in point with number 3, but very simply, it's the person that looks at this market now and goes, oh my God, clearly it's bullish. How did I miss this? And now they're trying to get long, right? Some people, again, just to show you guys an ICI, some people will see this as an ICI, which it is. This is an ICI, okay? So people could be entering this. This is a valid ICI. Nothing is wrong with it because the criteria does not make you profitable. A criteria is simply a criteria. It happens everywhere. It happens consistently. The question is, do you know where to use that criteria? The people entering this, even though it is an ICI, right, impulse, correction, impulse, are the people that are likely going to be losing long term, even though they're correct about the direction. Yeah, you're correct about the long, but what's going to happen now, very likely, is price is going to take this out, start flushing out a little bit, and then start building the new ICI ranges up right here. This is where money's made. This is where money's lost, even though you're correct about direction. So in this video, I want you to understand that just being correct about direction does not make you correct. And also at the same time, really make you introspect and think about yourself, because there's a very high likelihood that you're actually on both sides of the market and you're just choosing to say, I knew I was right, but it didn't fucking work. What's up with that? Because that's likely not the case for you. So please keep that in mind going forward. Now, very quickly, UJ breakdowns. Let's do a breakdown of one trade so you understand how to use this ICI methodology, okay? Very simply, for the longest time ever, I've been sharing bullishness on this. I've been sharing bullishness on this ever since actually around December. From there, we followed this entire thing up. Ever since then, as price began to roll over and break down, we walked away from UJ for about a few months. So you can see right here, we walked away from UJ for about 145 days, about 5 to 6 months, after which point price began to put in new bullish price action. And from there, again, I wasn't expecting bullishness, but as money began to support the last down moves before the up moves and began to support them over and over again, thereby creating S&D 2.0s, we began to be bullish again, and I began making videos on the UJ bullishness around this area here publicly and around this area, well, actually this area here publicly and this area here privately. So this is where, of course, the private mentorship learned about this. And again, this is a reminder that the private mentorship has a webinar every single Sunday that's usually from an hour to 3 hours long, where we work through every single concept, every single market, do the outlooks, walk through them, answer questions, all the beautiful stuff that comes with that. And of course, you get access to an amazing community. Now, so the longs are established. It's already established, and that's where the longs have started to come in. And from there, I made videos countless times telling you about the clouds of liquidity here and the fact that this high here would be ran and continue to be ran, and then hopefully continue to be ran. That happened, and then price rolled over. As it rolled over, we stopped trading around these areas here and these areas here on the 15-minute, 30-minute, 1 hour as they began to break down. We simply walked away from the market. Notice how we didn't start trading shorts. All of a sudden, price even broke the low. Many people at that point saw this as a bearish move, a bearish change of character, a start to break down, new imbalances to use to go short, new imbalances to use to go short, new S&Ds to use to go short. That's where, again, those 3 issues come from and where most people don't understand trends. We understand from a standpoint of what I teach on this channel, and I'll make more videos about this, that protected lows that are going higher and higher and higher within a higher time frame context that's already bullish, within a sentiment outlook that's already very bullish, all tools that are made available to you completely for free at the moment, okay? When there's a breakdown like so, or even 2, this is not showing you anything regarding a bearish market. This is simply showing you new weak to strong hand transfer, and that same point where contextually, if you're trading it to go long, you're going to be losing money, and then you're going to be very confused why you're not making money on the long side, and you're like, oh fuck, what's going on? Or you're someone that's starting to go short and getting short in all these areas here now, and of course, you're very, very confused. So instead, you start to understand that protected lows increasing with a breakdown is a re-accumulation model, and that's what you're going to be following. Now, price makes the bullish break or inside break, starts moving bullish, and then begins to support the inside S&D 2.0s. That is a very bullish sign, and at that point, we already expect price wants to run this high, and then as it runs this high, to just explode up through it. Now notice what happens at this area. I did not do this analysis, but notice what happens here. What do you see here? A supply zone. This is a Instagram mentorship SMC supply zone. This is where most people are looking to get short. Here they made 10 RR definitely on their 1 minute and 1 second charts. And now the price, of course, is going where it should be going. You can take a beautiful, beautiful look at that, but it's exactly what I've shared over and over and over again, nonstop with all of you. And if we take a look at the lower time frame very quickly within that same price action, I ask you one question: do you see any shorts in this market in regards to what I've taken? The answer should be no, and you should recognize that, again, the same things that I've taught, I'm actually utilizing. I'm getting involved with the trend. I'm only trading with the trend. I'm waiting for the trend context to be there and actually trade in that direction. If trend breaks down, I wait for money to come back in. I don't sit there trying to get into a trade every single day. We are here to make money. We are not here to take trades. Something that you need to remember if you actually want to make money in these markets. If you're showing up to just simply be in a market because, oh my God, it's breaking down, I gotta have a zone, you're gonna lose money. It's as simple as that. Notice how we wait, and all of a sudden, right, all this is showing bullishness. So now I'm expecting bullishness. If I jump down to my lower time frames now, based on whatever time frames I'm trading, right, what do you see? You start seeing a much larger back and forth market condition of the 1 hour, which means very simply, you're undergoing weak to strong hand, either to the short side or the long side. We don't know. But what we do know is that the higher time frames are already showing bullishness. The sentiment is showing straight bullishness. So we're going to expect it, and we're going to wait for it to become accumulation. And all of a sudden, the 1 hour begins to break long. That's a bullish sign. And on the 15-minute, it does the same thing. It begins to break long and starts to reclaim, as I kind of just taught you guys, the 200 MA here, which is now putting in motion the assessment that we're in the beginning stages of an accumulation, becoming a stage 2 markup, and should continue for some bit of time, especially since all the time frames and the sentiment are coming together. That's how you use the tools that are taught to you on this channel right here. And very, very simply, prices give you the initial ICI, another ICI, more ICIs in here, another one in here, another one here, another one here, another one here, another one here. And at that point, I mean, even at this one, I would say this one's already too late. Now you're here to ride the wave. If the wave wants to now explode, great, make your money. If it doesn't, or if you're no longer in a trade like me, I'm waiting simply for a flush out or reset and the beginning of a new reclaim to start trading this thing long. That's what I wait for. That's how I get involved. I don't sit here looking for shorts. And I've had this question asked to me a lot of times, but what break will make this market short? Is it this break or this break or this break? That's not how markets work. Markets don't work just because they broke a low or made a big break below a low. That doesn't make them bearish. What makes them bearish is the fundamental changes in the market's characters, the left to right orders as they come in. At the moment, nothing about this market is screaming shorts. In reality, a theoretical way to approach this and think about how shorts could make sense is we need to see price break this low, then re-break the high that broke the low, then hopefully make another break higher, then re-break a low, right? Then mitigate, then break a low, then break a low, then maybe come and play around here and then begin to build a 2.0 short model. At only this point, if all of these things happen as a hypothetical, would I begin to look at UJ as a potentially distribution model to start following it short. Other than that, I'm either getting long on it, waiting to get long on it, or simply walking away from it. An example of that is when this big break here happened, I walked away from the market and waited for it to get long again. And then those longs came in, and that's when I look to get involved. And at that same time, most retail, most dumb money, most hedge funds, most all these things that are averaging down, doing all this stuff, are predicting and trying to get short. And all of a sudden, that's how you get these runs that are hopefully going to now continue. That's how you look for trending markets and actually follow trending markets. I hope you learned something from this. Stop being on the wrong direction. And once you start understanding how to be on the right direction, notice why you're actually, in many cases, getting stopped out even though you're on the right direction. Learn to take on your risk. Learn to assess your risk. If you don't know how to do that and want to learn more and want to actually surround yourself with me, amazing people, good value, and get access to actual things that are going to visually put in motion what you're doing, this is the place for you, mentfx.com. Otherwise, if you're profitable, mentfunding.com for one of the best one-steps evaluations. All right, good luck. Love you all, and I'll see you all in the next video. Bye.